Hi everyone, let's go through my medium time frame and low time frame bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the trading plan that I shared before going on holiday, where we were looking for long setups right on top of the yellow target box with the stop loss below. And in the video uploaded on June 14th, I had a timestamp called trading plan where I showed this exact setup. Eventually, this long played out, and I had a couple of targets in previous videos that I mentioned as well, where the first target was taking this high. If price was going to take this high, I would be looking for 27.4k, which price took with high volume and a big candle, for then the next target being the 30k highs. Now at 30k, price then closed a 4-hour candle above the 30k highs, which for me was an indication to look for the 31k high, which was then the close of the long. So this was then the potential setup. Currently I'm in no position. I also just came home from holiday, so I'm completely neutral, and let's go through the different scenarios then, starting with the medium time frame bearish scenario. So over here we are still looking for a move to the downside in a bigger WXY scenario, which is a 3, 3, and then another 3 to the downside. Inside this wave X, we are then looking for an expanding flat, which is a 3, 3, and then a 5-wave move, which is an ABC structure. Wave C, most common target, is this white box over here between the two 1.618s. The upper 1.618 is taken a normal Fibonacci from the high over here to the low of wave B, and you can see that on the 12-hour and daily time frame, price wicked above the 1.618 but didn't close a candle above the 1.618, and that is important. And as it stands, it is still nicely respected, taking the liquidity above 31k for then potentially a move to the downside. Now in this particular scenario, the invalidation for me would be taking this high again, because then it is also going to be very likely we are going to close 12-hour or daily candles above the 1.618, which would be a more bullish sign for the medium time frame bullish scenario. Now in this scenario, if we then look for a move towards the downside, we look for the most common target area of wave Y, which is between the 1 and the 1.236, which is taken from the high to the low of W to then the high of wave X. And as you can see, I have a wide line crossing the most common target area of wave Y, and that's important because usually a wave Y is ending below the low of wave W, which is sitting at 25.8k. Wave Y does not have to take this low over here. It can move to the downside inside this area and then continue back up. So that is important. So the 25.8k level is an interesting level in this particular scenario. Now as it stands, with this push towards the upside, one might give more preference to the bullish scenario, but this scenario is still very important. And as I mentioned, I am completely neutral at the moment. It's 50-50 for me with bearish and bullish. It all depends on what we're going to see on the lower time frames. And of course, I will now share more updates again as I'm back from holiday, so we can observe what's going to happen over here. Because price is ranging in the wave C target area for potentially a wave Y, but also in a more bullish scenario, we could expect a potential move down eventually for then continuation, but more about that in a second. Now, this channel is something we've been looking at in previous videos as well. Price respecting the channel, eventually breaking out. And in combination with the bearish scenario, what's interesting is that we didn't have a backtest of the channel. So maybe people that were waiting for a backtest for then a potential breakout long of the channel have been missing out, right? Or they have been buying in this push towards the upside. And what's interesting in the bearish scenario is that we're going to go back to the downside, maybe then backtesting the channel over here, which could be a potential long area. Or the people that have FOMO longed inside this push to the upside because there was no backtest over here, they're going to be stopped out when price moves to the downside. So a potential fake out of this channel, basically then moving back to the channel, maybe even inside or backtesting over here, could be quite interesting. In the medium time frame bullish scenario, we are looking for continuation. So wave Y is in. Now from a time perspective, wave Y can be in. So wave Y is, if we take a fib time from the beginning of W to the low of W to the high of wave X, and we then toggle on the 0.382, you can see that wave Y is longer than the 382, which for me is usually a minimum requirement, which is fine. So time-wise, this wave Y is absolutely fine. The most common target area for wave Y is between the 1 and the 1.236, but also the 0.618 is a common target taken from the high to the low of W to the high of X. So now X moved over here. And then we're looking for wave Y. Now, the 0.618 was actually respected quite a lot of times. So over here, 0.618 hit for the first time. Second time, moving below, stopping everyone out, moving back up, then again respecting the 0.618 perfectly. Look over here, very, very nice, for a then continuation to the upside. So this can definitely be the low of wave Y, where in the more bullish scenario we are looking for upside, right? So if we then look in the bullish scenario, we're looking for this move to the upside to be a wave 1, followed then eventually by corrective wave 2, which should be a 3-wave structure. So if price is gonna go down in a straight line, wave 2 and any potential long setups over here are not going to be valid. You want to see a 3-wave structure to the downside for then continuation to the upside. The invalidation of this scenario is if price is going to take the low of this wave Y over here, because a wave 2 is not allowed to take the origin of a wave 1. If we look at the volume of this move to the upside, because if we're looking towards an impulse now, we want to check the volume, then on my chart, Coinbase over here, you can see that this move to the upside had quite a high amount of volume as well, higher than the range, as you can see over here, at least the wicks higher than the range over here. If we then go to the daily time frame and we zoom out a little bit, you can see that the volume is not that impressive just yet. So this is the volume of the push towards the upside, and it is, if I put a horizontal line on the chart, let's see over there, so this is then the horizontal line of the volume that we had. You can see that the volume over here, it's okay. I mean, this potential wave 1 had some candles that were higher volume. Of course, this wave 3, higher volume. This push to the upside, higher volume. So for a wave 1, I would say it is okay. It is still a little bit less than some of the candles we had in this wave 1. And this is then a potential high time frame 1, 2, and then a bigger move towards the upside. So volume-wise, yes, it was an increase in volume, but it's not necessarily too convincing just yet. You want to see move towards the upside with volume increasing, especially if this is going to be a wave 1, 2, and then in a bigger wave 3, volume has to move to the upside. If we then go towards the lower time frames, and this is going to be a bit of a longer video because I've been on holiday as well. So on the lower time frames over here, 5-wave move towards the upside. The bullish scenario is that that is not yet finished. So we then have a wave 1, 2, where wave 2, incredibly rare by the way, retraced to the 0.236, which is a very bullish scenario for a wave 2. Very rare to see a wave 2 hit the 0.236. Then you have another 1, 2, 3, 4 wave 5, where this wave 4 retraced to the 0.236, which is a common target for a wave 4, the fib taken from the low of 2 to the high of 3. So that's absolutely fine, for then eventually wave 5 being in over here. That is then the high of the blue wave 3, and then a 1, 2, 3. Currently working on a wave 4 and then a wave 5. Now what's important for this blue wave 4 over here is the low of the lower degree wave 4. So the blue wave 4 is a higher degree wave 4 than the white wave 4, because the white wave 4 is part of the blue wave 3. Now a higher degree wave 4 tends to end around the price area of a lower degree wave 4, meaning that the lowest this wave 4 can go from a Elliott Wave theoretical standpoint is the low of this wave 4 at 29.5k. Of course, this wave 4 can wick below, close above, and then continue, but if price is going to move towards the downside and starts to close candles over here, then for me, this blue wave 4 is going to be invalidated for another push towards the upside. Now, as it stands now, we do see that price is ranging on top of the 0.236, these blue fibs taken from the low of 2 to the high of the blue 3, for then potentially continuation to the upside for a wave 5. And I think for this wave 5, what's interesting is the 2022 range highs. And if I zoom out just a little bit, I can show you where the highs are. So over here in 2022, we had this range, a couple of highs, and I think that for a potential wave 5, grabbing those highs for then a move towards the downside is going to be very interesting. Most common target area for wave 5 is between the 1.236 and the 1.618, taken from the high of 3 to the current low of wave 4. But if price is going to find more downside, then of course the pull will be taken from the high of 3 to the eventual low of wave 4, wherever that is going to be. But as you can see right now already, the 1.618, again, common target for wave 5, the 1.618 in perfect confluence with the lower high, but also very close to the higher high of that range, for then maybe a liquidity grab and a move towards the downside, which can give us a potential short setup over here, which is a swing failure pattern type of setup. Wicking above, but closing below, and then moving to the downside. And if price is going to wick above, close below, then the close below these liquidity grabs, that's going to be a potential entry, and the stop loss is then going to be above the wick, wherever that wick is then going to be. On the chart, you also see Fibonacci times, which is important as the waves also have time relationships. Now, the white Fibonacci times is comparing this wave 2 to this wave 4. And as you can see, this wave 4 is longer than the 1.618 Fib time compared to wave 2, meaning it's longer than wave 2. That's what we want to see, as most commonly a wave 4 is longer than a wave 2. If we, however, take a Fib time from this wave 2, comparing it with this wave 4, and I'll show that in a second with a more bearish scenario, then this potential wave 4 is likely to be shorter than this wave 2. So that's why I now have this as a 1, 2, 3, 4, potential 5. Where if we look at the blue Fib time over here, pulled from the high of 1 to the low of 2 to then the high of 3, you can see that now this wave 4 has passed the 1-to-1, meaning that this potential blue wave 4 is currently longer than the blue wave 2 over here, which is exactly what you want to see for then maybe a push towards the upside in a wave 5. In the low time frame bearish and then bullish scenario, wave 1 is already in, and now you can see that this wave 4 is, instead of not yet being in, it is already in. So then we have a wave 1, 2, 3, 4, 5. Now the reason that this, I don't know about this scenario, is that inside a wave 3 you usually want to count a 5-wave structure. Now you can count this as a wave 1, 2, 3, but is this a 4? Like a wave 4, you know, you want to at least see a little bit of a retracement, usually longer than a wave 2. And if this is a wave 1, 2, and this is then a 3, 4, then you can see it made higher highs all the time, or higher lows, higher low, higher low, higher low. Not really a nice wave 4 type of structure over here. Maybe on the lower time frames, this might be like a 1, 2, 3, 4, 5 type of thing, but it's difficult to count this as a wave 4, to be honest, and then a 1, 2, 3, 4, 5. But of course, it is something as an alternative we have to keep in mind. For then a wave 3 high, sideways wave 4, and then a push to the upside in a wave 5, where inside this wave 5 to the upside, on the 1 minute, you can count a 5-wave move to the upside. So it looks very impulsive, but in this scenario, wave 4 then ended somewhere over here before that big push to the upside, which then ends wave 5 and therefore wave 1, meaning we are now in a wave 2 towards the downside. Now, if this is going to be a wave 2, we want to see this wave 2 usually being longer than at least the 0.382 Fib time of this first wave to the upside. And if I then quickly go to the 0.382, then we didn't yet pass the 382. So we still have time, and the minimum target for wave 2 is usually the 382 Fibonacci, currently sitting at 28.7k, taken from the low to the high of wave 1, with the more common wave 2 targets being the 0.5 to the 0.786, which is between 27.9k and 26k, with the golden pocket by far being the most common target area to the downside. If we look towards the downside in the support areas, we already hit the target box at the moment, which is between 30k and 29.8k, as we there had a weekly naked point of control. Let me actually put it on the chart over here. So we had a weekly naked point of control at 30k flat, which has been hit for some nice support. But then just below price and just above the 382, we have another little bit of support, a blue target box between 29k and 28.8k. And then, in my opinion, all the way to the downside, like there's not much structure over here. And what goes up quick can go down quick as well. So then the next target area is going to be all the way down here, which is sitting at 26.2k to 26.5k, which is also just below the golden pocket. So yeah, it's very interesting, this scenario, if price is going to move towards the downside. Now at the moment, price is not really moving to the downside very quickly, and again the 0.382 is a minimum target for wave 2, so we definitely want to see price making some bigger moves towards the downside instead of ranging. This looks more like a wave 4 at the moment than a very bearish scenario to the downside, but of course we will see what price does with all the updates that I will give throughout the day, right? 3 videos. So the next update will be 7 p.m. high time frame and macro update. That will be now after wave 2. We then expect wave 3 to the upside, which should be a very impulsive structure where volume is increasing. In the more bearish scenario, we then expect price to the downside, right? Because in the bearish scenario, this is then the high of a wave X, and we are looking for a move towards the downside. Now, as it stands, I put the high of 5 and C and the invalidation over here on top of this high at 31.4k. Again, potentially this is a 4 and another 5, but I don't want to see 12-hour daily candles closing above that 1.618, right? This is the 1.618. Closing 12-hour candles or daily candles above wouldn't really be bearish in my opinion for this particular scenario. So then we have 5 waves in, or potentially 5 waves if we can wick above and then still close 12-hour or daily candles below the 1.618 for a move to the downside. And this is important. What goes up quick can come down very quickly. Over here, not much structure. So if price is going to fall towards the downside, we have at least a little bit of support over here with the target box that I've shown, right? But other than that, it's like a straight line to the downside potentially. And then the next structure is all the way down here at around 26, 27k, right? If we then look towards the CVD, and I go to the lower time frame structures, we had some bearish CVD divergences locally that already played out. So over here, bearish CVD divergences, I'll show you the chart in a second, the AGGR. Bearish CVD divergences, target was these lows, which has already been taken. Now we also have some bullish CVD divergences, higher low on price, lower low on the CVD, where then the target is this high, but I always give priority to local CVD divergences. So I prefer to see some bullish local CVD divergences, where if we then go to the CVD chart, and I quickly refresh it, 15-minute over here. Let's first go to the 5-minute. You can see the bearish CVD divergence over here. Lower high in price, but on the yellow line, higher high on the CVD. Bearish divergence already played out as price took this low. If we then go to the 15-minute, then you can see very, very locally, there's not really anything going on. Yes, the CVD is very low, but it didn't yet really create like bullish CVD divergences, at least not with this red candle on the yellow line. So the yellow line, red candle, we are now going to move below, by the way. As you can see, the yellow dotted line is now moving below this yellow line. So if this 15-minute candle is closing, and by the time, well, actually that's going to be in just a minute basically, we might have some bullish CVD divergences on the local time frame. So that's interesting. On the 5-minute, let's have a look over here. On the 5-minute, we then also create bullish divergences on the yellow line. So that could be interesting for then a continuation and a push towards the upside. We also have news this week. So if we go to the news, then on Wednesday and on Thursday and on Friday, we have high impact news, which is the red flags that you can see. So on Wednesday, 3:30 p.m. might be volatile, Thursday 2:30 and Friday 2:30 p.m. Central East European time. Make sure to check your own time zone. Those can be volatile times on the chart, so make sure you trade safe around those areas. Then finally, I want to show you this because Tradingview has been updating some stuff, and I think many people might not know where their auto has gone because you only see log now at the right bottom of your screen. Now, if you move your cursor to the right side on the price over here, you can see that an A and an L are appearing, and that is where it went. So the auto is over here. You can click on auto, and then again you can scroll, and it just keeps its eye on the chart basically. And you have the L for logarithmic. So this is where the auto and logarithmic has gone. Now, if you do not have the A and the L over here for whatever reason, then what you can also do is right click on the chart, click on reset chart view. And this basically gives you auto as well, right? So you can always just right click reset chart view. So we have to this is of course then interesting for people that lost out on their automatic or log scale. And I'll just quickly look on the lower time frames. We did have bearish divergence. It's not the cleanest CVD setup, right? If we have CVD over here, it's not the cleanest because we had bearish CVD. So if we now do have some bullish CVD divergences, there were bearish CVDs inside the price action of the potential bullish scenario, which is not like a clean CVD setup. So just be aware of that in case price is moving to the downside. And then finally, I just came back from my holiday in France, and I want to show you at least a couple of pictures and take you along the ride. So for the people that were here strictly for the price action content, Elliott Wave, that was it. And then if we look at my holiday, I want to show you some pictures. So I was in the south of France for 5 days. We went to Aise, we went to Saint-Maxime and Saint-Tropez, we went to Monaco, we went to Jean Cap Ferrat, And I went to Antibes as well, together with my dad, because actually my parents happened to be in the south of France as well. So this is my fiance, by the way. We were over here in Jean-Cap-Ferrat, and yeah, just some pictures like in the south of France. Beautiful ocean over here where we swam as well. This is the Villa Efroussi from Rothschild over here that we visited. This is Monaco on our final day. This was also Rothschild. The pictures are in random order. So yeah, beautiful view, of course. This is Jean-Cap-Ferrat looking out towards the other side of the bay. Final evening, big cruise ship as well. This was in Antibes. This is my dad taking pictures. He has a very professional setup with crazy expensive photo cameras. So this is in Antibes. This is a man made of ladders. So you can see all the ladders over here, and it's a man that is sitting with his knees up. We had many great dinners on top of rooftops and everywhere else. So again, with my fiance over here at Scene restaurant and bar by Oliver. It's funny that my fiance actually found this restaurant by the ex-girlfriend of Charles Leclerc, the Formula 1 driver that had dinner over here. So that's interesting. We had a mountain. This is Aze. So this is Chateau Aze over here, or this is Aze as like the place. And Chateau Aze is the castle inside this place where we had dinner over here on our first day. This is Jean-Cap-Ferrat, the island. And then the airport of Nice is all the way over here. That's where we landed. Now, we had incredible delay on our first flight, but well, me in Monaco, I should say. Again, another rooftop bar, sushi, Monaco. You gotta love Monaco. We're thinking about maybe moving to Monaco as well. So this is in front of Casino Square, right? This is the casino area where we have. There's always nice cars, Lamborghini Urus in the back, some Ferraris, Aston Martins, all sorts of stuff. Jean-Cap-Ferrat. Monaco again, Jean-Cap-Ferrat. I'm not sure if I say it correctly, but big houses here as well. Very interesting area. Actually, Jean-Cap-Ferrat apparently has the highest amount of square, or the price per square meter is the highest in the world in Jean-Cap-Ferrat. I didn't know. This is the beach close to Nice. This is again Jean-Cap-Ferrat. This is Plage de Palable, I believe, and some pictures, right? So you get the idea. This is some of the pictures I like to show you. So yeah. That is basically it. That's what I wanted to show you. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use. And for now, thanks for watching and subscribing, and I will see you at the next one. Bye-bye.